Hey there, future CPAs. Welcome to this explainer. Today, we're literally hacking your brain for a 3-year retention of special itemized deductions. The goal? To guarantee you absolutely crush the LECPA taxation boards. Look, as BS accountancy students, we know your brains are completely overloaded with tax rates, ceilings, and endless exceptions. Rote memorization? Yeah, that just doesn't cut it anymore. You really need to understand exactly how the examiners think. So today we're bringing in active recall, contrasting, chunking, and memory anchors to make sure this information totally sticks with you until board day. Let's dive right in.
Okay, let's build that filing cabinet in your brain right now. We are organizing today's deductions into 6 quick folders: employer incentives, establishment discounts, the double discount trap, social good deductions, niche industry incentives, and a rapid-fire review. Let's get to it.
Folder number 1, employer incentives, which are basically your hiring perks.
Opening up this first mental folder, you really have to see how examiners love to mix these two up. So here's your first major study hack. Contrast the numbers. If a private entity hires a person with disability, they get an additional 25% deduction on the salaries paid to that PWD. Awesome, right? But if they hire a senior citizen, it's only a 15% additional deduction. And here is the exact trap they'll set for you. That 15% for senior citizens comes with some seriously strict strings attached. The employment has to last for at least 6 months, and the senior citizen's annual taxable income must be below the poverty level set by NITA. So just remember, PWD is 25% with 0 extra strings, while a senior citizen is 15% with strict conditions.
Still in our hiring folder, what if a company rolls out a registered enterprise-based education and training program? We call that EBIT for short. Well, they can claim a massive 50% additional deduction on their actual training expenses. This is the government's way of pushing companies to upskill students. Now, for the boards, just keep in mind this is capped at 5% of direct labor expenses or 25 million pesos, whichever is lower. But honestly, that 50% anchor, that's your golden takeaway here.
Moving on to Folder 2, Establishment Discounts. Think of these as selling perks. Shifting gears from hiring to selling. The absolute key here is separating the standard discount rates from the super niche ones. Let's lock these in. 20% is your standard discount for senior citizens, PWDs, and national athletes on everyday things like medicine, restaurants, and hotels. Simple enough, but watch out for the curveballs. Solo parents? They get a 10% discount, but strictly on baby necessities like milk and diapers, only for kids up to 6 years old, and only if the parent makes less than 250,000 pesos a year. Oh, and do not forget the super strict 5% discount on senior citizen utilities. That one maxes out at 30 cubic meters for water and 100 kilowatt hours for electricity.
All right, let's pause for some active recall. We really need to wire your brain for exam day. Imagine a grocery store gives that mandatory 5% special discount on basic necessities, like a bag of rice, to a senior citizen or a PWD. How much of a special tax deduction can the store actually claim on their income tax return? Take a second. What's your gut answer?
Did you guess 0? Because the answer is absolutely 0. This right here is a classic LECPA trap. Under the law, sure, that 5% discount on basic necessities is totally mandatory for the store to give, but it is not available as a special tax deduction for the seller. Examiners are obsessed with testing this because it completely breaks the pattern. They want to see if you're just blindly memorizing or if you actually know the rules.
Folder 3, the double discount trap.
So, how exactly do examiners test overlapping discounts? They use the no double discount rule. Let's say a customer whips out a PWD ID, but the store is already running a huge 30% promotional sale. The customer does not get 50% off. You absolutely do not stack them. The rule is super straightforward. The customer just gets the higher of the 2 discounts. In this scenario, the 30% promo wins, and the mandatory 20% ID discount just steps aside.
Opening Folder 4, Social Good Deductions.
This is where the government hands out tax incentives to businesses for stepping up and spending their own cash to help society. I want you to think of the Adopt a School program as Donation Plus. Usually, a regular donation to the government for a priority activity is just fully deductible at its actual amount, right? But if a corporation teams up with DepEd or CHED under Adopt a School, they don't just claim that actual amount. They get an extra 50% thrown on top as a special itemized deduction. Literally, for every 100 pesos they donate, they get to deduct 150 pesos from their gross income. Okay, here's another incredible social good incentive. Whenever you see a lactation station or breastfeeding facility pop up on a test question, your brain should instantly scream, ×2. It's a double deduction. Establishments can deduct up to twice the actual expenses they incurred for setting it up. But there is one massive catch. They absolutely must secure a working mother baby-friendly certificate strictly from the Department of Health. If you don't see that DOH certificate in the word problem, don't take the bait.
For any future lawyers or general professional partnerships tuning in, providing free pro bono legal services is totally deductible. But again, look out for the examiner's trap on the ceiling. You can't just deduct an infinite amount of pro bono hours. The deduction is strictly capped at the lower of two amounts: the actual value of the services, or 10% of the gross income derived from the actual performance of the legal profession. Always, always hunt for that 10% limit.
Folder 5, Niche Industry Incentives.
It's study hack time. How in the world do you memorize the Seed Industry Development Act? Easy. Think about nature. Seeds multiply, right? They double in growth. Because of that, the law grants a massive 200% deduction. Private Filipino seed producers get to deduct twice their expenses for research and development for their first 5 years. Seeds double, so the deduction is 200%. Boom. Locked in.
Let's chunk these last two niche laws together to save some precious brain space because they actually share the exact same rate. If a business generates green jobs, certified by the Climate Change Commission, of course, they snag a 50% special deduction on skills training and R&D. In that same vein, if a private entity modifies its physical facilities to accommodate PWDs, like installing ramps or modifying desks, they also get an additional 50% deduction on those direct costs. Just chunk those 50%ers right together.
And finally, Folder 6, the LECPA Rapid Fire Review.
All right, we've organized all the files. Now let's lock in that 3-year retention. Mental screenshot time. Seriously, blink and take a picture of this list in your mind. Hiring a PWD, 25%. Hiring a senior citizen, 15%, but with conditions. That 5% basic necessity discount, total trap, not deductible for the seller. Lactation stations give you a 2x deduction. Adopt a school adds a 50% bonus. And the seed industry, it doubles down at 200%. By chunking this info, contrasting the tricky rates, and actually understanding the logic behind the law, your brain is now totally wired to spot the examiner's tricks. You officially have the tools for long-term retention. But here's my final provocative question to you. Are you actually ready to keep practicing these active recall acts every single week until you are sitting in that exam room? Don't just watch this once. Keep reviewing, keep testing yourself, and you are going to absolutely conquer taxation.